So CRSR is one that I've, have had an eye on. I made good money on it after its IPO over here. And these guys really benefited from the COVID and the stimmy check and all that stuff. But they had this big run up over here. Then it's just been dead. It's been making a beautiful pattern of lower highs and lower lows below all these declining moving averages. Then it started to turn sideways. And as it turned sideways, we had all these moving averages crossing back and forth. That represents indecision. It means shorter term trends are starting to show some sign that buyers are there, but the longer term trends are still down. So it's indecisive, most likely stage one. I'll put an anchored VWAP off of this peak. And then so this is a principle in the book called the handoff, where I'll say that was an important high. Where did it last touch? Well, it didn't really touch. So I'll put one at this high. And then you can see that one hit here. And now we're above that volume weighted average price. So it tells me here's a stock that's getting ready to turn higher. Maybe this is going to be the next big stage two uptrend on the weekly time frame. As it breaks, you look at it and say that's a shoulder, that's a head, that's a shoulder. And maybe this is a big breakout stock. So I looked at the daily time frame, and what I saw in there was it was holding the year-to-date anchored VWAP, and then it had this big volume event right here. I didn't get involved that day, but when we then look at a 15-minute time frame to see what happened there, that was that breakout, right? So what I did was I put an anchored volume weighted average price on that event, and I got involved in this one yesterday at $17. Let's look at a 5-minute chart. I got involved at $17.62, right over here yesterday. And what happened was, and this was a losing trade actually. So on this one, I sold a third at daily R2, which was right over here. It was close to the high of the day. I sold, and it sounds ridiculous, but it was an 8-penny move. So I sold a third of my position. Now the stop on the balance, I lost 27 cents per share. So I bought it at 17.62 and I got stopped out. I don't have the price written down, but I lost 27 cents per share on it. So somewhere over in here, 45 cents or something like that. So on 2/3 of the position, so on 1/3, I made this much. On 2/3, I lost that much. So on 2/3, I lost 27 cents per share. Overall, if you take the winner of 8 cents on 1/3, the loser of 27 cents 2 times, on average, I lost 16 cents per share on this stock. Now, my original stop was at $16.95 per share. But what I did was that morning, I was concerned about the market. So I bought in here. I sold some at a profit. I sold some at a loss. And I didn't wait for that stop to get hit because I figured, wait a minute, it looks like it's failing at this anchored volume weighted average price. It popped its head above there. It broke back down below the morning low, and I got out of the stock. So instead of taking an 81 cent, or instead of taking, it was a 67-cent loss I would have taken at 16.95. Instead, I lost 16 cents per share. This was a half a risk unit trade. So 67 cents was one half risk unit. Let's just say I did 1,000 shares, so $670. Instead of losing $670, I lost $120 by taking that first third off and raising the stop on the balance. So I lost 0.12 risk units versus 0.5 risk units. And that allowed me to get out of the stock and say, the market's falling apart, this stock's falling apart. So it could have been a lot worse.